Welcome to Digital Asset News. Take the top stories in cryptocurrency and digital assets and break them down to bite-sized pieces. Today, great stuff. First up, Galaxy Digital's Mike NOVOGRATZ urges investors to buy more gold than Bitcoin, which is kind of confusing, but he'll explain why. Also, there's going to be a fork of the Brave browser and why I find this totally ridiculous and there's no reason for this whatsoever. Also, the Celsius CEO chases down the bank, and there's some more scary IRS tax news, which your taxes are due July 15th if you live in the US. We'll go over all that quickly, but first let's take a look at what's going on in the market. So first up, Bitcoin is down 2%. Everything's down, actually. Ethereum's down, XRP's down, shocker. Bitcoin Cash, Cardano is down massively, 7%, even though it's up 25% for the 7-day. But over the last 24 hours, everything is down because what goes up invariably will come down. So I know yesterday we had actually talked about FOMO, and I had told you that even me, who has been in this space for now going on 3 years, even I fall victim to FOMO, and I start to think about, hey, should I get in now because everything's blowing up and I don't want to miss the boat, and I get all anxious. But in all honesty, these are the emotions that we need to control if we're going to be solid, steady investors. And I told everybody this yesterday, so I'm hoping that you actually listened to that and didn't actually fall in yesterday, because right now you'd be down, depending on which position you have, you might be down pretty by a lot. So remember, it's all about the steady hand, dollar cost average. Don't take huge risks, and over time, you'll win. That's it. So let's break into today's stories. So first up, Galaxy Digital's Mike NOVOGRATZ talks about, hey, you need to have more gold than Bitcoin, and he explains why. So when I first saw this, I was like, this is probably just a clickbaity title, and it's going to, totally do the opposite. But in actuality, it's the truth. So it starts off by saying gold is aiming for a new all-time high after going past $1,800. So I can tell you who's happy about that. My man Peter Schiff, who is a serious gold bug, and he's going to be talking about this on Twitter. I'm not going to look up his account, but I'm sure he's gloating. Gold is now approximately 6% shy of its lifetime high. That's pretty amazing, considering that gold's been around for thousands of years. Bitcoin, by contrast, is still struggling to get a foothold above 10K. Mike NOVOGRATZ believes the top crypto will outperform gold in the future. However, he cautions investors against putting a majority, and that's the key word here, a majority of their wealth in Bitcoin instead of gold due to the crypto's extreme volatility. Now, here's the thing. I don't believe you should put the majority of your wealth into Bitcoin either. I mean, we never know what's going to happen. It's a highly volatile market. I remember there's a story back in 2016 or 2017, somebody sold their house and put it into Bitcoin right before the bull market. If you think you can time it, then go right ahead. But I'm here to tell you the chances of that happening are very low. And that's not to mention that, did that person sell at the top when it was around 20,000, or did they write it all the way down to when it was 3,000? Who knows? But the big thing is that you should never put the majority or all your eggs into one basket. That is a recipe for disaster, some type of allocation of funds. And when I hear about these stories, I'm like, why don't these financial analysts and investors and institutions, start to recommend to their clients like, hey, Pete, there's a lot of different problems going on out there with the economy and the different things with the Fed printing crazy amount of money. Why don't we do a hedge and we take, 1 to 5% of your portfolio and put it into Bitcoin and digital assets, because year over year, they have been kicking the tar of everything else. Sure, that sounds good. If every analyst or every advisor told that to their customers, their clients, we would have a multi-trillion-dollar market cap, and it would just make sense, because why wouldn't they do that? So I'm waiting for that to happen, and we're going to talk about why it is going to happen sooner rather than later. Anyhow, so Mike's talking about having more gold. And ex-Goldman Sachs partner Mike NOVOGRATZ, I didn't know he was an ex-Goldman Sachs partner, so hey, good for him, is a well-known Bitcoin bull. Earlier this year, he predicted that the flagship crypto will reach an all-time high by the end of the year. So we'll see if that happens. Hopefully he's right. The Bitcoin advocate acknowledges that it is still quite hard for most people to buy the cryptocurrency. But there are several experts currently working on making it easier, and when this finally happens, Bitcoin will be the creme de la creme. But When I first heard Mike say that, he said it's very difficult for people to buy Bitcoin. I'm like, what are you talking about? You can just use Gemini or use my new favorite app, Voyager, and it's like super fast. You just click a button, boom, done. What are you talking about? But again, that is my own ignorance because I don't realize that it's not just about me. It's about other people. And when Mike talks about this in the Unchained podcast, he makes it crystal clear what he's talking about. So this was actually a couple of weeks ago. He was on Unchained podcast, which is fantastic. I've already subscribed and liked it. If you have an opportunity, definitely watch this interview. It's fantastic. But he's going to lay it out in the next 2 minutes about why it's so difficult, why financial analysts are going to FOMO and they're waiting for the price confirmation, and then it's all going to blow up. So take a listen.
And listen, this is an adoption story. And if Bitcoin was easy to buy, it would be a lot higher. And so we've dealt with a few hedge funds that are buying it, right? They've got to go through all the due diligence for their funds. And it's a 2 to 4 week process for their back office to feel comfortable. And so it's not like pick up the phone and call. Then they got to usually talk to their board. Hey, we're going to buy crypto for the first time. The other, I think, new group of buyers that are coming, they're not here yet. The financial advisor community is giant, right? If you think the bulk of the wealth in America and in Europe is not owned by Gen Z or millennials, though they'd like it. It's owned by, Gen X and baby boomers and older, and, the 50 to 80-year-olds. They don't have Bread wallets or Coinbase wallets or Venmo apps, and so getting the financial advisors to feel comfortable to then sell it to them is a process at Galaxy that we're really working hard on. That's being amped up in a big way, not just with us, with others as well. And so I think in the next few months, you're going to see a lot of FAs putting their clients into this.
And also, Mike, as you know, is the structure of this is everyone's got their eye on it. And if the price moves up, everyone gets FOMO and has to get involved. And that's at institutional level now.
Yes.
So if it goes up further, the more it goes up, the more the market cap goes up, the more they can justify it to their trustees and the more people get involved. So I think we're at that tipping point of a virtuous cycle that can continue for a while, but we just need to get through these levels first. But I think essentially every institution, every RIA is almost kind of short the upside calls. Not really. I mean, obviously there's a bunch of people who are, but really what it's all about is people don't have it and they need to get it, but they wait for the price for confirmation.
I mean, that's it. And I'm sorry I didn't introduce that. That was Raul Powell, and he is a macroeconomist, and he's been featured on the channel a couple times. But smart guy. I mean, all smart people here on this panel, and it just makes sense, right? They are waiting for the price confirmation. They're waiting to go in heavy, hopefully heavy, and then just like Mike had talked about, the financial planners, they are the ones that are really going to push this whole next bull run, I think, and they're going to push it onto their clients, and I think it's going to be a big thing. So let's jump back. Okay, moving on, it states, regardless, the Wall Street veteran, Mike, thinks investors should buy more gold and less Bitcoin because of the level of risk associated with the big price swings in crypto, he states. And so my sense is Bitcoin way outperforms gold. But I will tell people to have a lot less Bitcoin than they do gold just because of the volatility. So he's talking about short-term versus long-term. Long-term Bitcoin, and I think a lot of other digital assets, I think different digital assets are going to outperform Bitcoin massively over time. But the safest bet in cryptocurrency, I think, is Bitcoin. To finish up, it talks about Bitcoin rally from a shade under 4,000 to 10.4 in just 2 months, right before the block halving in May. But since then, the strong momentum has faltered, and Bitcoin has been on several instances failed to keep its head above 10K. And right now, we just saw what it is right around 9,200. The crypto's correlation with the S&P 500 index has grown stronger, and it's tainted its image as a digital safe haven asset. So again, depending on where you're at, and as far as what you believe or what other people believe as far as Bitcoin and the correlation with S&P 500, we have seen I wouldn't say a massive amount, but more institutions getting involved. I mean, we have everything from Grayscale, Fidelity, which has like 7 trillion assets under management. You got TD Ameritrade. You got Paul Tudor Jones, that's investor legend, who's putting 2% of his whole portfolio into Bitcoin futures. You've got a lot of different players coming into the game. So the good news and the bad news is that the good news is they're bringing all their money. The bad news is they're bringing all their shenanigans. And one of those shenanigans that they have, or the tricks up their sleeve, is like, hey, if something starts to go south in a deal that they're doing on the traditional market, they're going to need liquidity. And guess what? Cryptocurrencies and digital asset markets never close. So if they want to pull some money out, guess what? They're going to do it. And there's a problem when the S&P goes down. They got to cover their shorts, their long, whatever they have to cover, whatever they have to do. They're going to pull it out of one place, which is where we are at, and that's a problem. But that is exactly what's going to happen. I think it's going to be more correlated as time goes on. However, I will say this: it may happen, or on the flip side, is smart investors like me and you. They're going to look at that and go, you know what? There's a tremendous amount of upside. I'm not going to trade this. I'm not going to give this away. I'm going to have my position on something else, whether that be another stock. And if things go south, I'll sell something. But I'm going to keep Bitcoin. I'm going to keep my Ethereum. I'm going to keep my Chainlink. I'm going to keep all these different digital assets because I know they're going to go up massively. And I'm just going to hold. So that could be one of those situations where when people start to realize the value of where they're at, I think they're going to hold on to more things. But in the short term, I don't see it going that way. Anyhow, moving on. In his interview, NOVOGRATZ pointed out that the current economic climate, where central banks across the globe are printing insane amounts of money, is perfect for assets like gold. And it's the same reason that the bullish prognosticator loves Bitcoin. And in that same interview, in the Unchained one, she asks, the interviewer asks, so what is the catalyst? What is your message to all your investors? Is it because of the quantitative easing and the lax position for the central banks? And Mike NOVOGRATZ says, bingo, that's the only thing, or that is the one major driving force of what we're pushing on to our investors, because once they start to get into that, they realize, hey, this is a pretty good asset to get into. And it's the same type of argument with gold, so it makes sense. And lastly, it states, and perhaps more importantly, Bitcoin has noticeably outperformed gold in terms of year-to-date gains. What could possibly stop it from continuing its great ride in the coming months or years? Which is the most ominous sentence I've probably read in a long time. So I don't know. I will say this. Lastly, I always think that in 2020, moving forward, the new savings account should be gold, silver, Bitcoin. That's just makes sense to me. I mean, if you're one of those people who says, you know what, I'm just going to keep fiat in my savings account, well, good luck, because it goes down 2% every year. So you're just losing money. Make the money work for you. Put it into something that actually can appreciate. Gold, silver, Bitcoin looks like a safer bet for me. Anyhow, let's move on. Next up, Brave browser forked, makes a bold move, setting legal pressure. And I got to tell you, this is a disappointing article. Anyhow, blockchain browser formerly known as Braver, which originally forked from the open source Brave browser, rebranded itself to Bold browser. Braver browser launched in June following reports of Brave auto-filling the company's affiliate link into searches for certain crypto exchanges like Binance and Coinbase. So we covered this, 2-3 weeks ago, and it was the same thing. So there was some type of article that popped up when people would go to sign up for Binance and Coinbase, it would pre-fill it with the affiliate link for the Brave browser. And so if you had never had Coinbase or Binance and you just typed in coinbase.com and you went there and you signed up, it would, if you were using the Brave browser, it would self-fill it. So where Brave would get that affiliate commission. However, I will say this, for every affiliate link that I have, which if you're looking to find what I use and what I recommend or don't recommend, in the description of every one of my video, there's going to be an exchange fee. It's going to look like this. When you click on that, it's going to take you to a Google spreadsheet, and these are all the different exchanges and wallets that I've ever used or are using or actually have gotten rid of. So I give you all my recommendations and the different fee structures and different things that are good and bad of everything. Right now, I'm pretty heavy into Celsius and Voyager. I think those guys they got things locked in. Really good stuff. But on all of mine, not all of them, there's some that don't have an affiliate link, like Abra and Uphold. I don't. But on Celsius, like if you click on this, so you'll get $25 in Bitcoin if you use my affiliate link. and I get $25. Same thing with Voyager. So the same thing here for this Brave browser. Like, they will get $10, but on every affiliate link that I used to use for Coinbase and for Gemini and all the rest of them, is that I would get 10, you get 10. So the same thing should happen for Brave. So really, if you think about it, like, they're actually doing you a favor. I mean, tell me if I'm wrong here in the description or in the comments, but if they pre-fill it and $10 goes to them and $10 goes to you, wouldn't you just want the $10? Or would you be like, no, on principle, I don't want that $10 because, you know, you shorted me. But guess what? It's a business. You got to make money. So, I mean, if they do that, they do that. And that's it. And then there was different things that it came out about, you know, it wasn't being done and this and that. I don't really honestly care if Brave had pre-filled it and they got $10 and I got $10. For me, I don't care. But apparently some people do, and they got all in a tizzy about it, and they said, you know what? We're going to X this out, and we're going to make our own. We're going to do a hard fork, and we're going to make our own browser and go from there. So, sure. Anyhow, going on with the story. The Braver team said it had removed Brave's referral link injection, and the full release was going to delete all adware, including the basic attention token. So if you don't know, I use the Brave browser all the time for all the videos for digital asset news. I love it. It's great. When you click on a new tab, I mean, you can turn on the Brave rewards and you can surf the internet and you'll see ads, but they pay you in basic attention token, which is awesome, right? If you want to do that. I don't do that because I got a lot of stuff going on. So I just need, I can't get back time. And right now, this thing saved me 2 hours. So I don't know what else can do that. So I'm happy with that. Here's the thing. For every browser that you use, I mean, you're not getting paid to do anything. I know you're not doing that on Chrome. I can tell you right now, not on Internet Explorer or Edge or any other thing that you're using, you're not getting paid to be seeing ads. So like this one, I love it. It's great. And then you have the option. You have the option to turn it off or turn it on. So with this new Braver browser, you don't have that option. They're just going to not pay you at all, which, I mean, that's what they want to do. Sure. So anyhow, Brave co-founder and CEO Brendan Eich, I think that's how you say it, Eich, tweeted that the forked project, which they're talking about the Braver browser, will have to rename and also run a bunch of services and updates on their own. He said no free writing on our servers. So going down to the last part, another potential fork is incoming. Additionally, the contributor to the story told Cointelegraph that they are planning to build a new browser by forking ungoogled Chromium rather than Brave. Not because of legal issues, but because the original code is a bit messy and difficult to maintain/update. The developer said, "We plan to make bold a Chromium-based browser that contains the features that people expect from privacy-respecting ad-blocking browsers, with next-generation integrations such as Web3 and IPFS, without any advertising programs or token reward schemes." Good luck with that. I mean, maybe people don't want the tokens or the option. They're not going to give you the option, and that's what they want to do. So as I was reading this, I just got to tell you, I see this all around, and I'm not going to go into politics or any of that stuff because this is not a political channel. This is all about digital assets. But I don't know what happened to working together and having an argument, but working it all out and going, you know what, we want this and we want that, and somehow compromising and meeting in the middle. But it seems like nobody can do that anymore. And this is the same type of thing. I'm like, why do you have to fork everything to get what you want? Can you work together a little bit better to make things work? But it just doesn't seem to work that way. And I always think, like, isn't that one of the points of, peer-to-peer decentralization, just to kind of, hash it all out and make it work, because that's where we are in this community? I guess it just doesn't happen. I'm tired of forks, and I'm tired of projects, forking and forking and forking. Bitcoin went to Bitcoin Cash to Bitcoin SV, Bitcoin Gold, Bitcoin Diamond, Bitcoin Tomato, whatever it is. I just don't get it. Now, let me know in the comment section what you think, but I'm getting tired of seeing all this stuff, and I hope it actually works itself out. So let's move on. Next up, this is the CEO of Celsius, Mashinsky, and he just did this quick little video where he's just running to catch the bank. I thought it was funny because I'm like, how many CEOs are out there running in the rain, just doing YouTube videos? It's crazy.
We go at it, rain or shine, running up, down. Yeah. And guess who's in front of me? Let's see if I can catch up with her. The bank has great stamina. Can Celsius win? Get in front of the bank. It's definitely down to the last half mile. The bank is giving up. Here we go. Celsius in the lead.
I mean, you get it. It's pretty funny. So like he does these videos with his wife, and he calls his wife the bank, and it's just, I'm like, who does that? I mean, who does that? So if you don't know, like thanks to my subscribers, I actually took a look at Celsius, because I get so many comments like, have you checked out this coin? Have you checked out Shoe Coin? Have you checked? But I had so many requests for Celsius and VeChain and Voyager that I had to look at them, and I got to tell you, it's pretty impressive type of stuff. So if you don't know what Celsius is, it is essentially a wallet where you can buy cryptocurrencies, but everything you store in your wallet, you get interest off it. You don't have to stake it. You don't have to hold it in for like months or years or whatever else. It's just however long you hold that cryptocurrency in that wallet, you will get paid for an interest rate, which is pretty cool. And then in this little clip, it's only 2 minutes long. I'm going to actually a minute and a half. This is Alex Mashinsky. He's the CEO, one you just saw right there. And he's just going to tell you, how Celsius is beating the bank, or, how this all works.
So you get paid, right? You put your money in a bank account. The bank takes your money and immediately lends it to me on my credit card. They pay you less than 1% on your deposit, and they charge me 25% on my credit card, right? So they just do an introduction. Your money is lent to me. They keep 90% of the value, or 95% of the value. So that is just a system that should not work. Most of us, if our real estate broker or insurance broker charged us 90% of the value, we would never work with them. So I decided to do something about it, and I think that is the killer, the application of basically eliminating the toll collector and creating a system that acts in our best interest is the purpose of the blockchain. It's the purpose of cryptocurrencies. So Celsius Network enables you to deposit your coins, it enables you to lend them to someone else, and you get to keep 80% of the value. So instead of losing 90% of the value, you get to keep 80% of the value.
So that's pretty cool. I mean, that's why I like it. I've already started to move some of my coins over to Celsius, because I'm like, wow, I don't really stake it or do anything else. Just kind of sits there. That's great. And yeah, it works okay. Now, I would not recommend you put in, tens of thousands of dollars into your Celsius wallet, because it is a hot wallet. So just be aware about that prospect. So, I mean, I like Celsius. I like Alex Mashinsky. He's a dynamic guy. He was I guess they call him the grandfather of Voice over Internet Protocol, or VoIP, and now he's talking about, well, I did that back when the internet was just coming about. Now I'm going to do MOIP, which is Money over Internet Protocol, and he just has this good vision. I like to see that, and there's very few CEOs out there that do the things that he does. So I mean, if you have to bet on people, I would bet on this guy. Last up, and I'll make this quick, taxes are coming up July 15th. It is July 9th? Oh, so we got 6 days or so. And this was from Shehan Chandrasekhara. I've featured him on the channel before. He's a licensed CPA, and he writes for Forbes Crypto. And he said, here's a copy of the full statement of work, or SOW, sent out by the IRS to tax professionals. And he's just saying, look, they are getting geared up for this year to look at virtual currencies and cryptocurrencies and what you actually have, because all the data that goes to the exchanges, guess what? They all have that. So I've already filled it out, and if you need a company to work with, I recommend cryptotrader.tax. In the description of every one of my video, there's going to be 20% off. It allows you to do your taxes. I did 2017, 18, and 19, all different trades, and there was over 500 of them. And it was able to get done in less than 30 minutes. That's from me just learning the whole process. It's super simple. So check that out. And that's really the big thing. So that's it. So thanks for sticking with me. I really appreciate it. That's it for today's video. I want to say thanks to all my supporters. So for my level 1s, I appreciate it. Thank you so much. Level 2s, I'll give you a shout out. All Right Soft, Wen Mullet. Myself, who else? Dave Plummer, Grant Sharman. Bruce Wood, Baking Benjamins, Noah Flippin' Vegas, Martin Lewin, Michael Ralph, William Howell, Crazy Crypto Canuck, Tessie Ryusaki Positive, Truck LLC, JC Durex, Nat Slack, John Miller, The Office, L. Merg, Michael Jeffrey, The Kel Show, Andrew Herrera, Terry Prospery, EOS UK, Whatever, AE, and Hero Soap Company. And just so you know, there's a Join Now button underneath. These level 2s, they pay a little bit extra, and I do a shout out, but this is actually going away as of the end of this month. So I'm just going to do random shout outs. I think we got a lot more things to cover moving forward, like scams, like different things that could actually help you guys, like the Celsius network and Voyager and different projects that are coming about. So every minute counts. I just want to move forward. So that's it for today. Really appreciate it. Thanks so much. See you in the next one.